All right. Good morning, everybody. Welcome to this week's Marketcast call. Hope everybody had a great weekend. As usual, I'd like to just ask everybody to chime in if they wouldn't mind. Let me know they can hear me all right. We'll give everyone a moment here to hop on board. All right. Good morning to all of you as well. All right. A lot of familiar faces. All right. I think we've waited long enough. What's the schedule for Thanksgiving? Let's see. That's next Thursday, correct? Let's see. Well, obviously, you know, we won't be doing any calls on Wednesday. I'm sorry, Thursday. That part we know. It's not working. Keeps switching me around here. Oh, I see why. All right. Yeah, yeah. Market's open on that Friday, so we should be good to go. So as far as if you, I assume you're asking about my calls. Well, we just won't be doing the prime time on Thursday, and then for those in my mentoring program, we won't be doing the trading academy. There won't be any Paragon that day. But all right, chop chop. Let's get into it. Uh, Yeah, where to start? Obviously, nice little pop post election. We were all pretty much no real surprise, right? We saw the Tuesday before the market push back above this old 5765-ish area, which is one of the things I encourage everybody to do. When it comes to an FOMC statement, like I've been marking, for the past 3 years, or a jobs report or whatever. It's very common for the market to kind of tip its hand ahead of time what it plans on doing. Not all the time. Sometimes it's kind of like, I don't know. What's the market telling us? But when it is telling us something, I can't remember too many times where the market didn't follow through with what it said, right? Uh, so, for example, back here, right, this was an FOMC. S&P had pushed back above this key level, came down, bounced on it the next day. 100% we're thinking higher the next day. Doesn't mean it's going to happen, but it's very clear what the market's saying. Should be going higher. Voila, FOMC made no difference at all, right? Little bearish turn down here, thinking, oh, maybe lower. Wow, shocker. Wow, shocker, right? So same thing here. If you look at Tuesday before the election, it implied higher. Oh, wow, shocker, right? So now here we are, kind of rolling back down. We were a little concerned because we saw on a weekly scale, specifically with the Dow and the NYSE, that there was a momentum divergence building. So this is a daily, and dailies don't pop up too often. Well, weeklies are even rarer, and monthlies are obviously rarer than that. So when they appear, they tend to be more reliable. A little harder to put them in, right? Takes more data, and so since they're harder to put in, they can tend to be a little bit more reliable, and then they also imply bigger moves, right? So when we see the Dow, right, if we come over here and we go to a weekly, right, you can kind of see the lower high in momentum, higher high in price. Okay. And last time we did something like that, we got a around 10 percenter. So I would have expected more, but it's been a pretty good run for the market. All right, so we got another one kind of being put in here, and NYC is the same way. S&P kind of, sort of, I mean, it's more of an area, but that 58.75 kind of struggled there a little bit to hold it. But another thing that's relatively reliable is when your advanced decline line doesn't confirm your high, right? So here's the high from the previous price high. And as you can see, slightly lower, you know, this last run up. Again, nothing in the world of technical analysis is guaranteed. We start taking the weight of the evidence. We see momentum waning here a little bit on a little bit larger of a scale. We see the advanced decline line not confirming, and it's starting to look like we've seen a short-term high of some kind here. That being said, hey, this market doesn't seem to want to sell off very much at all, but we know it eventually will, right? We know sometimes 10 percenters come, which is, I think, what this was. This was slightly less. I think this was only like 6% or so. But we haven't had a real doozy of a correction. And obviously, in this past year, I think the last time we did that, you have to go back quite the ways, which would have been here. And this was barely over 10%, if I remember correctly. Right. So if you think about this low, we haven't had a real good, you know, correction since this bull market started. And this is pretty close, 4,600 down to the 4,100. So it is 10%, but obviously if you do the math, barely. It's basically just a 10% sell off. So we've had that 10%er, we had this 10%er, but we haven't had that nice, juicy, nasty north of 10%. And it's been, over 2 years. So to say we're due, no one should be shocked. Right? And you kind of see down here again that slight uh, non-confirmation there. So I think caution is somewhat advised here. You can kind of look pre-market. We're going to open up a little higher, and after a raunchy day on Friday, no real surprises there. That we might get a little bit of a bounce, but I'm not sure how. Obviously, after what I just walked through, I don't have a whole lot of confidence in this rally holding up. But I always want to be fair. When you're in bull moves, it is your bearish signals and or signs that will fail more often than say in a bear market, and vice versa. When you're in a bear market, your bullish signs will fail more often than say in a bull market. Okay. So pretty straightforward stuff. I would be cautious. Any more questions about the market? As a matter of fact, I'd probably using today's rally to look at a put or two, which we'll look at some that we're liking, some that we're already in. All right. Doesn't look like we got any questions here. Let's take a look at gold turning around here a little bit. So I think we could be seeing some sort of recovery here. Pretty nasty little sell-off. So I don't know. I don't know how confident I'd get on running to those highs. This looks like we got more ways to go to the downside, but a short-term trade not looking too shabby. We continue to watch oil goofing off right here at this little green line that goes back quite the ways. It's interesting to watch oil continue to try to hold this line. Kind of like it, I don't know, kind of like it knows it's there, right? Also seems to be a continuation head and shoulders. So it seems like a breakdown is inevitable. At least that's what the market's telling us at this stage, right? So you take out this shelf, and one would think you're coming down here. This was a pretty important level back in the past, around 62. So I'd be looking that as target one. But I would think if you break a mark like this, it's a pretty important level. I would think that you're probably dropping way past 62 overall. So we'll struggle there a little bit. All right, so we got that. All right, stocks and stuff and things. Oh, we got a few. So we are already short in spot. I made a few bucks on this last week. One of the things that we liked kind of watching spot, first off the market, it's always market first. So we kind of came into the week with a little bit more of a bearish view. We did buy one call just to be safe. And we'll see if that pays off this morning. It'd be nice if we can cash in on the calls and then let the puts run down. But anyway, one of the things that my thing is keeping everything as simple as possible, and I do that because that's the path to success. Not my words; that's the words of any real market expert that's stood the test of time. The simpler we keep things, the better we tend to do. And unfortunately, that's not what we're kind of pressured to do, whether it be marketing or everybody in the the comment section supposedly is a hero. Everybody on X is supposedly a hero, right? Using their magical little system that they've developed. So there's like that pressure to overcomplicate things. Um, my following has been built over 17 years by doing the exact opposite. As a CMT, having a better understanding of what it is we're being told to do versus maybe what we should be doing. So one little simple thing that I've always encouraged my students to look at when it comes to say stop losses or maybe a small sign that a swing move has ended is just simply the higher lows of the day, lower highs. Okay, so for example, if you look at this move here off of 320, if let's say hypothetically you had bought at 320 for whatever reason, right? It had been kind of support back here and here, whatever. Okay, notice how if you to just manage your stop loss, put it maybe a 0.5% or so underneath the lows of the day. Notice how you never get stopped out until the stock was in, drop mode, eventually down to here. And you can kind of see, The highs get lower, right? Lows get slightly higher. So you can kind of see it just kind of happening all the time here. Look at these higher lows of the day. Once they breach, down we go, so forth and so on. Notice every step of the way, that's what it does. Higher lows, lower highs. Now, is it going to do it every time? No. Is it going to be that great every time? No. However, you notice once we put in this low back here, higher low, higher, 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 higher. Obviously, on Friday we breached it. So this is one of the stocks we looked at as a potential or as a put play. So full transparency, one of my trade services were in these puts. So could be coming down. Maybe who knows? Maybe try to fill in this gap. You never know. That'd be wonderful for us. That would work out fantastic. What else we got here? Broadcom. Broadcom sure looks like it just put in a head and shoulders here. Doink, doink. Took it out. Most obvious first mark would be 160 here. A level that's been important multiple times, not only support, but also as resistance. So we know would be the magic number. Now this one was a shorter term. So our thought was that if we do push lower today at some stage, and this gets to 160, probably take the gain on this one, which would make spot free, and we could let that guy run. Now, a couple other puts I think that are worth watching. LRCX here took out my little 72 green line. And again, doesn't have to be near as hard as we make it. So we kind of look back here at this 80 level. This is a mark that goes back a ways. So we broke it, probably going back down to 72. Shocker. Once we bounce, probably going back to 80. Wow. Shocker. Shocker. Now we're down to 72 and break it. Right. So it's pretty fascinating to watch thousands of students, spin their head into a pretzel with 17 different indicators, can't make money at all. I'm like, oh, well, I don't know. Why don't you buy some puts when you break 72? See how that goes for you. Right? Stop getting, bent over backwards, all this silly shit, and just keep it simple. Right? Look for a good breakdown, look for a good breakout, set a stop, let your profits run. Boom, bam, pow. You just licked 97% of the market. Okay. So, but that's something worth a watch. I thought end phases reversal last week, right there at the end, and failure to hold 60. Sure looks like this is going to continue after that brief little bounce on Thursday. So this is something I think might be worth a look at as far as puts go. Call wise, kind of like what App's doing. App just does not seem to want to break, this kind of 280-ish type spot here, and end on a pretty good note. So if the markets do hold a little bit of a rally today, and who knows, maybe we're not going lower. Always got to leave open that possibility. Then this is our hedge to our two puts. Let's see, what else did we look at the end of last week? Let's see, we had a great trade here on MU. Well, a good trade. We'll call it a good trade. It's a one-day trade, so we took 100% gain and just called it a day. But it was nice to see a couple other members. They had a good week and they didn't mind risking. With a one-day trade, you're risking getting wiped out. And they didn't mind because they'd had a good week and they rode this down. I think I heard a couple 300% gains on this. That was kind of nice. And why do we do that? Already, well, get your pen, get your paper, right? You're gonna write all this down. Okay, hope everybody's gonna write. There's a lot here to do. We broke this key level of 100. Did we get all that? Any questions? I know I went through it pretty fast. We bought puts. Ooh, wow. Right. So email if you have questions. Think about it. Roll it over. Talk to some friends. Real tough stuff. So we had a pretty good trade there. Just a nice way to end the week. What was our winning trade? Oh, our winning trade to start the week was Bill. Well, this one was pretty easy. I think it popped huge. Yeah, that's right. Start the week. I was like, wait a minute. Yeah, start the week. Looked pretty clear. These key levels, they can kind of act as magnets, kind of pulling you up there. right? So very simple stuff. We just bought the 90 calls. Hey, check it out. We closed it. So, whew, hope everybody's getting all this. Real tough. And I feel bad for all the people out there just making things so tough. What else did we do last week? Paragon had a pretty good trade here. On this one, we were expecting downside, but we had, I think, a total of, wait, two puts on? Three, maybe? Counting this strangle, we had two puts. Yeah, and then we added end phase as a call, which, by the way, was almost working at one point. It was kind of funny in that bad market. Yeah, it's only a buck 50 to strangle this thing. We had the 340s, or I'm sorry, 330, 340. Yeah. No, we only took the 200%. That's what I kind of advise, depending on how the other trades are going. But we only took the 200%. Members always free to do what they like best there. So, but yeah, so pretty darn good week across the board. Now, in fairness, we always do better in my services when we're volatile, right? Uh, I'll never say trading is easy, but let's just say things are easy for us when things are moving, right? It's a little bit more challenging. We don't do the we're not scared, right, of going just long, going just short. We aim for those big winners and such. And so, obviously, very helpful when we get some big moves one way or the other. So, may not always get the biggest gain that we'd like to get. Like, for example, we didn't get the whole 300% here. We didn't get the whole potential. I think that MU was a total of, it was like a 4 to 500% gain there to be had. But these little 100% gains are pretty easy to get. Where the challenges come in when the market's not doing a whole lot. So hopefully, at least my hope is that we are selling off and that we can kind of get volatility to stay elevated a little bit. Otherwise, I'm looking around here to see if there's anything else we were looking at last week. Oh, yeah, that's right. We did. So I think Scumos did food too. That's right. Yeah, that's right. When this thing rolled back down, this would have been, I think, Wednesday. I think me and about a 2 dozen other members um targeting 87. Why? Well, I don't know. It's where it found support here. It's where it found support here. Where do you think it's going to go if it keeps going lower? 87. So we bought puts, got down there 87. We closed it out. Up today. So we're going to see if this big pennant takes shape at some point. We're going up through this orange. We're going through this green. So that we know. I tell you what, we really got clocked last week. Holy moly. Healthcare space was not looking good. Yeah, that one. So it could be a short-term play here. Curious. It's going to open about 92 and a half. So you're going to be, so there's your 90 puts right now. This is going to go up about 50 cents. Dollars. So it's going to be like the general 80 to 90 cents for a 90 if you want to do puts there. And your 95s are going to go. So total, played your cards right, you might be able to do something like a 90.95 for like $1.50. Problem with that trade is you don't really get anything unless you break one of those two. You have to break one. Yeah. So we can take a look at it after the market opens. All right. Other than that, yeah, I'd be looking for lower. I'd be looking for us to. It seems likely selling into this, if not today, maybe next day or whatnot. Um, and obviously, we have Thanksgiving week next week. Speaking of, by the way. We do have once a month, we do a webinar for my mentoring program. Nothing being sold there. It's just more, hey, if you're interested, hey, you could speak to someone. We only bring in a couple new members a month because there's no assistants, there's no sub coaches, there's no, you know, my members are dealing directly with me. But it's very, very unique mentoring program in a couple ways. One, that it's lifetime. So once you're in, you're never paying again. Okay, I'll work with you as long as it takes. Two, it includes everything. So it isn't just coaching; it's coaching and trade ideas and education and actual trade alerts. Two different things: trade ideas, trade alerts. The members that are making the most money in my mentoring program are the ones that are taking the trade alerts and they're acting on the trade ideas. And then they're reaching out to me for support on how to work those trades, manage those trades, pick the right strikes, so forth and so on. So it's pretty unique. The trade signal service that comes with it also allows me to offer an investment payback guarantee. That service has been running for about 3 years. It's private, so you can't access that unless you're a member. But it's been pretty consistent as far as the profits. And so that allows us to guarantee that you will get a return of your investment. So if you're interested, here's the link. This will be next week, by the way. Just posted it in the comments. So feel free to come in. What we'll do is I'll kind of break down the market, just like it's pretty casual, right? I said there's no major presentation. I got a handful of slides. We'll look at the members area so you can see it yourself. So there's no surprises or anything. But we'll spend the bulk of it kind of explaining my overall strategy in the markets, which is very much to keep it simple, stupid. Okay. Um, Stick to the things that actually matter. All this indicator crap that keeps getting thrown at you doesn't matter. I'll explain that. I will prove that. Okay, indicator, schmindicator, you can use whatever you want. It's not going to have a whole lot to do with you succeeding in the markets. All right, so we're going to focus on discussing what things do matter. It's the non-sexy stuff. Right? Want, discipline. Oh God, here we go again. Got to have a plan, right? Yeah, actually you do. Let me guess. I got to manage risk. Yeah, I know. Crazy talk, but it's hard to be around if you're, not managing risk and stuff. So we'll focus on that. Talk a little bit about all those little components. I'll show it to you: the education, the trade ideas, the trade alerts, the whole thing. And if it looks good to you, great. You can hop on the phone with one of the guys and talk to them about it. If not, cool. We got to talk shop for a day. And like I said, there's no high pressure sales. I'm not going to say, if you do it today, you save some. Nope. It's just learn a little bit more about what I do, why I do it. Look at some more trades like we just did today. And like I said, show you it's called the lifetime trading system. And that's that. So again, it's next week. I think it's next Wednesday, right before Thanksgiving. And we'll bring in a lucky 2 or 3 people. No one's ever quit LTS. I think there's a pretty good reason for that. So otherwise, no matter what, we'll be back on here next Monday and the following Monday. And I'll throw that link up there next Monday as well, one last time. But wrapping it up, yeah, be cautious in the market. Like I said, we're looking at that advanced decline line, not really confirming. We're looking at weekly momentum diverging, both the Dow and the NASDAQ or NYSE. So I think these are reasons to be a little bit cautious. However, I don't know that there's any reason to believe that the overall bull market's in jeopardy or anything like that. We would need something a lot more than this. But as you saw, we're 2 years into this thing, and we really haven't had a major correction. We've had a couple of nice 10% pullbacks, nibbling at the edges of that nasty correction, but it just hasn't happened yet. All right. So if you go back to, I think it was 2018, if I remember correctly, we had a 20%er to end the year. Let me see if I'm right about that. If I remember correctly. What year is it? I gotta go back. Gosh darn, gotta go back a ways. Here's 2020. There you go, right there to end the year. So it started beginning of October and just a shit fest right into the end. Blech. So certainly wouldn't be the first time we ended the year on a rough note, but yeah. All right, let's get this ready to go. Got some other calls. Hey, everybody, have yourself a great week, and we'll be back next week. Have a good one.